All right, all right. Let me actually just make sure we're live on the YouTube side. And we'll get this thing jumping off. All right, I see it. There we go. All right, so now I got eyes on the chat over here so I can catch you guys' comments and remarks. All right. So, welcome to GamePlan Sunday. Today is December 6th, 2020. We're going to take a look at what occurred over the markets over the past week, what we noticed coming down the pipeline, take that information and to utilize it to make some money in the markets this week. So, I want to welcome everybody here and thank you guys for joining the session. So, what we'd like to do is start off on our website, which is wallstreetjackboys.com. And if you're not a member, then make sure you become a member. Registration is free. And a lot of the information we're going to cover is going to be right here on the website. All right. Okay, cool. So let me just go down the list here. This is the news feed on the website. So hopefully you guys, all the members here should know how to navigate through the website now. But you guys who are not familiar, when you go to the website, you'll be able to see this right on the news feed. Just click on the news feed side right here and you'll be able to catch everything that's in my window pane. All through the week, we're posting things on this news feed that's important to the markets, economics and financial information. It's kind of like a Facebook, but without the garbage. Okay. Without the garbage, there's all value here. Great information. So let's actually, I'm gonna try to go back as far as I can. Let's see what good information we have to cover here. All right. So let's go. All right. So let's go here. All right. S&P Global, they bought IHS Market. So you guys don't probably know who that is. S&P Global, S&P, y'all know S&P 500. Anyway, S&P, these guys, I actually use some of their information as well. Really expensive software they use. If you're familiar with Bloomberg terminals, this is like a direct competitor. But anyway, IHS Market, when we're going over economic information like the PMI numbers and all of that, this is the group that actually presents all that data. So anyway, that company agreed to buy, S&P agreed to buy that company, basically. So that was good news in the markets, of course. I'm not going to go back any further than that, but just know that that's what was on that. And then we had the Jay Powell situation testimony that was there. So we had Jay Powell and Steve Mnuchin. They had a 2-day meeting this week. And this is posted on the site, so you guys can read that. I am not going to read through this because we got a lot to cover. But that was something that it was talking about. ECB, this is Christine Lagarde. There's a news about that. This is on the website, so you guys can go click on that, check that out. Also caught this news here about JCPenney headed for Chapter 11, heading out of Chapter 11 into the holidays. So that was information on that. But we had the PMI numbers here. Okay, so this is what I want to get to. The manufacturing PMI numbers registered at 57.5%, down 1.8% points from October reading. Let me just click on it real quick so you guys can see it. So the minister says that the manufacturing economy continued its recovery in November. So November was a good month. Okay, this is a reflection of the month of November, saying that it was a good month. Committee members reported that their companies and suppliers continue to operate in reconfigured factories, but absenteeism, short-term shutdowns to sanitize facilities, and difficulties in returning and hiring workers are causing strains that will likely limit future manufacturing growth potential. So they're basically saying that there are changes that they are making, that they're having to make because of the COVID situations that's slowing things down. So I'm going to click on the chart. This is on the website now, so make sure you guys could do your research, okay, right here on the website. So you go here, you see the PMI numbers, and I just highlight a little bit of it just so you can see PMI numbers is the first number right here, manufacturing PMI. And then we can see the previous series here and the current series here. They already do the math for you to let you know it was down slightly. But remember, the PMI numbers are based off of 50. So once they get to that 50% level, Above 50 is expansion. Under 50 is contraction or it's lowering. So we talked about these things for years, and we even predicted the recession. We was talking about manufacturing was in a recession before we got into this recession. But what we're seeing here is that it's saying that because, again, it's above 50, it's at 57.5, which is a good sign. So it's telling us that the manufacturing section is growing, but it's growing at a slower rate. It is in a 6-month trend. All right. So all of that appears to be good. And so when you're reading this data, this is giving you, these are like leading indicators of the future, basically. These are the guys who are making things. And so you get direct input from the manufacturers. Again, this is the manufacturing sector. So what I like to do is also capture the respondents, the participants in the surveys and things that they're directly saying. So it'll tell you certain quotes from these guys, which would be like right here, and then also which sector they're coming from right here. Okay. And so what I did highlight some of the, I think I tried to highlight some of the bad things or risk things. And here it said the resurgence in COVID-19 cases is adding strain on our tier 1 and tier 2 suppliers. Multiple suppliers mentioned that finding new people is an issue with the COVID-19 situation, and there is a learning curve for new supplier hires, impacting production efficiency at their place. This is in the transportation equipment sector. Okay. The next one says we are getting a lot more COVID-19 hits in our factories. We are also sending employees home for 14 days to quarantine if they were in close proximity to individuals that tested positive. We have had to shut down production lines due to lack of staffing. Cost of goods sold is much higher than normal due to labor and production inefficiencies. So they're letting you know that they're sending people home. The COVID cases are going up. They're sending people home. And this is having a negative impact on their cost of goods and their production. So it's causing inefficiencies. And this is in the food, beverage, and tobacco product sector here. So that's when they say stuff like that, just know that's inflationary, right? Prices got to go up. There's either you got a shortage, in the supply chain of whether it's workers or products. Okay. Jet fuel being down and consumption really hurts the refining markets. This is in the petroleum sector. Jet fuel being down. I was traveling this past 2-3 weeks. I've been traveling, and I went down to Alabama, and the gas was pretty good down there. I think it was like $1.70 or something like that. I mean, I was able to get a full tank of gas with $20. I can't tell you the last time I can remember that ever being a possibility, but that was interesting, right? I guess they're further, they're closer to the refineries and everything down there. So you imagine that gas will be cheaper. So that was cool. But anyway, they're telling us here that the jet fuel being down and consumption really hurts the refining market. So people are not traveling as much. That's hurting their business. Sales have been steady, but down 30% year over year. Work hours for production are going up, but still have several on layoffs. So they still got people laid off, although production hours are going up. Starting to see some inflationary pressures on materials. So they're also saying that, hey, the cost of goods are going up. Now, when those material prices increase, then this actually goes to, it gets passed on to consumers. So it gets passed on to us. These companies, they don't absorb those prices. More than likely, they don't. They'll pass it on. So you'll see prices in the markets will go up. So these are the type of things that I'm looking for when I'm reading this data. The next one, business continues to be strong with significant back orders. Suppliers have struggled to hire people as we have to support the increased business. We are seeing significant delays in getting parts and materials from China through U.S. ports, especially at the port of Long Beach. Material costs continue to hold steady. The national election and continued COVID-19 uncertainty are concerns. All right. So they're telling you right there, they're having issues with getting the material, getting the supply from China through the U.S. ports. Again, we still have trade tensions, trade issues right now. So, and it looks like that is going to continue as well with the trade situations. This past week, the House of Representatives just passed. They just passed some kind of bill that was banning Chinese companies. Yeah, they just passed a bill to ban Chinese companies, including Alibaba and all of that. So that is risk to the Chinese, Chinese companies in the U.S. markets. And so, Republicans been on board with it, but, now you have Democrats on board with it as well. And so, although I think Biden is going to be, more compliant and more, in tune with the United Nations and China and all of them, I don't think there's going to be a walk in the park. He's still going to try to be tough. So I don't think a lot of these tensions are going to go away. And we're seeing that also. So anyway, that type of information on the political side is impacting the markets. From here, we're seeing it. Okay. This one here says customer order volumes are very strong, but our suppliers are having issues meeting our orders due to people shortages. So they're having a shortage of workers again. So you having all kind of shortages, but people still need things. People still need stuff. So people still surviving. We still have demand out here, but the supply, it looks like it's not catching up with the demand. So that again is all inflationary. So anyway, that was news that we had this week. Taking a look at the PMI numbers. All right. And what is this? Okay, so, oh, cool. This right here is the latest installment from Ray Dalio. Let me see that real quick. Okay, yeah, this is the latest installment from Ray Dalio, the cycle of internal order and disorder and where we are in that order. You guys can see that right here. And you can click and hit, you can click read more, and you'll be able to read the entire article, which is really long. But as you guys can see, you can just read the bold things to get the quick glimpse. You know, he's pretty much saying the same things he's been saying in this report. He's talking about warring from internal within a country, what he's seen of cycles over cycles, wealth gaps, and the political side, you know, the Democrats, the Republicans, and how they're going to divide the pie and things like that. And also keeping in mind of what's happening with US and China. So let me just pull up this chart right here real quick. This here, you know, he's basically describing the cycles, right? He's showing you how dynasties form and how they decline, basically. You can start out with the New World Order. You get prosperity. You form a debt bubble. You have a big wealth gap. So the wealth gap widens, and it gets so wide because of the debt. Then the debt busts. Okay, so then you have boom, recession or depression. Then they start to print money and credit. Then you get revolutions and wars. You have a debt and political restructuring, and then you have a new world order. And these things happen in cycles and cycles. Okay, so and you know, Dalio has a lot of wisdom. He talks about how, you know, people. He talked about even his dad and other people think that these things can't possibly happen in their lifetime. And we're actually living through a historical time that, you know, nobody would ever thought would happen. Ray Dalio said this is a once in a lifetime event that we're going through right now. And what he's describing, he's been describing the new world order that's actually having to take place now, because in this order, he's showing you where we are. And this is where the US is right now. We are here printing money and credit. Okay. So when he's telling you this is where the US is at right now, and where are we going? The next level, revolutions and wars. Okay. Now, you know, he is cautious of saying that, you know, about the whole war situation, but we already are at war. There are different levels of war. Before military wars, it's always economic wars. I was just talking with my son about the whole situation, World War II. They're talking about it in school and everything. I was talking about the Japanese and Pearl Harbor. And I'm like, I never learned about it, you know, on the level that I'm learning things now when I was in school. I just know what they tell you, right? But I didn't know the reason for the whole Japan bombing Pearl Harbor. This started 10 years before that, okay? It wasn't just spare of the moment. It was one of those things that we tore them up economically. You know, the U.S. put the clamps on them because we had special interests over in China. The Japanese, they're expanding. They have a small piece of land. Land is limited. Resources are limited. Their people expanding. They needed to expand out so they can continue their society. And so therefore they started to invade China, to start taking over China, basically. And in the U.S., we just wasn't feeling that because we had special interests in China. We're doing deals with China. So we started to support China, sending military stuff, you know, all kind of things. Then we started slapping on sanctions on Japan. Japan had massive, like, you know, food shortages and all kind of stuff. People getting ready to die, right? And then we had the oil embargoes and all of that. And so we shut off the oil, and Japan calculated that they would not survive, I guess, for a year or 2 years. So in response to that, they launched the Pearl Harbor attack on the U.S. You know, it's like backing a dog in the corner. and they knew that they couldn't beat the US. That was the crazy thing, is that, but what else they're going to do, right? But there was at that point, and it was like, F it, we just going to launch an attack first. And then we hit them with their Hiroshima and Nagasaki. And my son was asking me, you think that's right or wrong? I don't see things through the lens of right or wrong. I just see things, as Thomas Sowell says, there's no solutions. There's only alternatives, right? So we're just, hey, there could have been a different course of action. But we can only study what happened. Anyway, I wanted to bring that up to you because I had a conversation with my son early this week because he's studying that stuff in school. And that was, economic wars start before you get to shooting. And so Dalio, he's constantly talking about that. But if you know where we are here, printing money and credit, the next level that we should progress to is revolution and wars. And this is internal or external. Okay. So anyway, this is China. This is where they are in their cycle. Okay. They had a new world order after Mao Zedong, socialist, and then came to Xi Jinping, excuse me, when Deng Xiaoping, that's what it was. Deng Xiaoping, he changed China to capitalism. It's still communism, but they have an open market. And so from the open market, capitalism always bring prosperity. Socialism cannot bring prosperity ever. Every time in history, only capitalism, because capitalism is a productivity system. It's all about production. Socialism is about destruction of what was produced. So socialism always has to revert back to capitalism after it runs out of the capitalist money. So anyway, China, they're at the prosperity moment, and this is where they are now. They are in their debt bubble moment here. Our debt bubble has already burst. Okay, so we're here. All right. So anyway, he's just showing us this in the charts and his great studies. And you guys got to understand, when you have these guys as big as Ray Dalio, the biggest hedge fund manager in the world, these guys are ultra billionaires. They have teams of data scientists, all kind of scientists you could think of. Team. He doesn't do this stuff by himself. He has all these teams. I wanted to say that because I don't know if you guys quite understand Wall Street Jack Boys, but when we started Wall Street Jack Boys back in 2017, and a lot of you guys are still here. When we started it, it was not the Pierre Show. Okay. If I wanted to make it the Pierre Show, I would have named it the Pierre Show. We created the Wall Street Jack Boys as a group effort where everybody gets to contribute. And it's a community where we help each other. We study together and we do all this research to get insight so we can make money together. The lone wolf don't win in this game. Everybody on Wall Street have teams. Wall Street have teams of analysts, teams of traders, teams of everything. So I want you guys to understand, when I rebuilt the website, this new website that we have now, it's so that we can conduct research all together. So the website itself is a resource. You can go and search things. You can do all kinds of stuff. So not only do you have courses, but you have the news feed, which I just showed you guys. There's nothing but value. There's no trash in here. Now, because I make this, if y'all want a trash talking group to get some shit off your chest, let me know. We can have a group just for shit talking, okay? But because I understand with Facebook and Twitter and all of them banning people and doing all this other crap, you don't really have freedom of speech. But we can have that on our own website. We own and control this. So definitely take pride in this. I know I do a lot of the work, but I'm doing it for community. I'm doing it for all you guys. I see it as a us thing. And anytime I talk about Wall Street Jack Boys, it's a group thing. And what's up, gang? Y'all hear me talking about the gang all the time? I'm not talking about me. I'm talking about all of you guys, because all of you guys contribute. So I appreciate it. But anyway, so you have guys like this who have all this money, all these teams. We have to pay attention to what they are laying out. There's no way that you as an individual trader can compete with these guys with teams. Even the all-star traders out there, some of these guys, they can't even get jobs on Wall Street. Okay. A lot of these all-star traders you see, they're selling. Okay. But these in Wall Street, they got all the data that we don't have. All right. So we're taking a look at that information and we're making our decisions, and we can do our own research with that. So they're doing the work for us. Let's utilize that information. Here's another chart here where Ray Dalio is showing the red is China here and the blue is the United States. So the lines, the US is here and China is here. You see that red line? So he's basically showing you our empire. We have peaked out already and we are now declining. Okay. So the trend goes as the trend goes. In stocks, we talk about follow the trend. The US trend is going down. The Chinese trend is going sharply up. All right. Now, a lot of this, if you guys can see way back here, okay, way back here, China was declining. This is where they got their bounce at. And this is where we started to fall at. Okay. A lot of this stuff come from, what I've learned is a lot of things. Oh yeah, Dustin, we are completely off of Facebook. Well, I'm not completely off of Facebook. We still have the Facebook group, but I'm not active in the Facebook group at all. I just go in and I try to budge and nudge people. But what I discovered, because with Facebook, they give us the data from the groups. If you have a group, you have this data, and it lets you know people is active and all this other stuff. And what I've noticed is that we have a lot of people that say they want to learn, and then they'll join, but then they won't be active. But they're actually active in their inactivity, because Facebook will show us, it will show me people that see the posts. I know who see the posts. It'd be hundreds of people that see posts and you get one like. You get no responses, no comments or anything. So it's like, why are people not commenting? Why are people not asking questions? When I learn how to trade, I ask questions all day, every day. There's no way that you could possibly learn if you do not ask questions. You need to ask questions. I communicate with all other traders. You guys see my dude in the group, Bridgie. We trained together for years, under the same mentor. But we communicate with each other. That's how we network. We know each other from that. And so the whole purpose of that is for everybody to come together to create networking and to share information, share the wisdom, share the value. We got new traders, and then we got, OG traders. The idea is that OG traders could share wisdom to the young traders. It's not the Pierre show. It's the whole crew. Wall Street Jaguars. I don't know it all. Nobody knows it all. But a lot of you guys have your own wisdom. All of you guys are superstars. I think that everybody in the crew is superstar. So that's the way I see it. But we haven't been getting the type of responses that we need from the Facebook platform. What I discovered is Facebook is like a garbage platform. I post things to see how people react. So if I post anything political, I can get, 1,000 responses. I post things about the markets. There's no responses. So we want to bring it all in-house on our website, because we know if you come to the website and you're on this website, you are serious. Okay. You're the cream of the crop. The hard thing is trying to get people off the trash platform onto the value platform right now. So we're trying to get everybody on the platform. I spend a lot of time and money in building this platform. You guys have been here for the longest. You've seen the progress of where we came from, where we are now. And there's nobody in the industry, mark my word, nobody in what we do trading has a platform that can fuck with Wall Street Jack Boys on everything that I love. Nobody can fuck with Wall Street Jack Boys. Not this platform here. Not at all. Not even close. All right. So just understand there's lots that we can do here. All right, cool. Anyway, just showing you guys so you know where we are in this economic cycle. This is not me. I didn't put this out. This is Ray Dalio, biggest hedge fund manager in the world. Okay. US declining, China rising very, very sharply. If you go back here, I was telling you guys from my study of economics, because I've been studying economics for a little while here. A lot of this stuff happened, the transition. America used to be a production economy. We produce things, and people always need things. We produce majority of things that were in the world. So people will buy from us. Now that has changed. China now produces for everybody. So therefore their economy is soaring. America is now a service economy. We're not a production economy anymore. And we are tanking. Okay. So we don't have the productivity. That's pretty much that. And he goes into, you can see the political spectrums here, Republicans and Democrats. And he's showing you the division between those two. And so you have extremes within both parties, and they're continuing to grow. So in this latest installment, he's basically talking about internal wars between Republicans, internal wars between Democrats, and how somebody has to win those. They have a common enemy, which is either Republican or Democrats. But after they win that, then they war within each other to get control. Everything is about power. So you talk about the you got these far left guys in the Democratic Party. Then you got the more conservative guys in the Democratic Party. I guess Joe Biden is a little more conservative, but then you have like AOC, who's more extreme. And those people, like the Bernie Sanders and them, they're going to be fighting to get this power. And so if they get the more power, then their ideals will be pushed further in society. So this is what Ray Dalio is talking about in this latest paper. He's talking about, whoever wins, their ideologies are going to be spreading and they're all going to have an impact on the economy. So he talks about how the let me see here. When the cycles change, the new world order. Okay, this is just another chart. You guys remember when when I predicted the recession, and I was showing you guys the yield curve, right? The yield curve inversion. Okay, so this is what this is, right? And I had access to this. I have Dalio's, great body of work. I was showing you guys this right here. It's freaking crazy, all the kind of charts and stuff. But you can't find this chart on the web that goes back to the 1900s. I think most charts stop at around 1980 or somewhere around 1950s. I think that you can probably get it from the Fed site from like the 1950s. But see, Dalio's work go all the way back here. This guy studies 500 years, over 500 years actually. But in his new book, he's actually just presenting from the 500 years of data, basically. Anyway, the interest rates, you guys can see the blue is the interest rates, and showing how it hit rock bottom here in 1930. Also rock bottom here started from 2008, the Great Recession under Obama. Okay, so he's basically saying at this time we look like this time in history. So if we're looking for clues of what to expect, then we're taking a look at history, because history is a great teacher. So 1930s, that was the Great Depression, and we see under Trump became president, and this is what happened to the interest rate. Okay, so interest rate rose under Trump. Okay, then we had the recession, and now they're back at zero. You got to understand this also. Okay, the Federal Reserve were not playing under Trump's. What Trump wanted is he wanted them to keep it down to zero so he can pump up the economy even more. But they didn't do that. So he started fighting with Powell. You guys remember he was beefing with Powell, talking about fighting him and all that, because you messing up the money, you making money expensive, right? We need to keep money cheap so people can take on more debt. That's what he was talking about, right? Anyway, well, the interesting thing is, I think it was 1819. We don't have it on a chart here. If you go back here, the first Great Depression was that year, 1819. Murray Rothbard, famous economist, he actually did a report on it, and we got out of that depression because the government didn't do anything. That was interesting. They didn't do any intervention, and we got out of that depression shortly and much better, right? And so ever since this depression, we've had nothing but intervention. FDR, Franklin D. Roosevelt, the welfare state, all of that, all of this, we've seen all of that happen. So anyway, this is an interesting time. I'm not going to take too much time. I'll talk your head off about that. I just want to show you guys the work research that's put out. It's on the website, so you guys can actually check that out. So the charts and everything is here. But that's all good stuff. So anyway, he's talking about the future, where we headed at in the future, based off of what we've seen in the past history over and over and again. Okay. So anyway, make sure you guys leave a comment on that post. If you have questions, anything like that, I'd love to engage with you guys. You actually get like little perks, little awards and stuff just for communicating and, networking with people on the website. So check that out. Salesforce agreed to buy Slack technology. I used Slack before. It's pretty cool. A lot of coders use that. But Salesforce, they bought that. Another great buy that Salesforce bought was Tableau. You guys seen some of the charts that I built. I use Tableau. It's awesome stuff. Salesforce got that, and then they got Slack. And I think they're building up their arsenal to compete with Microsoft, most certainly. But this is a really good move for Salesforce. Okay. Right. What else we got? Crypto. So crypto was on top of everything. You use Salesforce? Yeah, a lot of people use Salesforce, definitely. Crypto is on top of everything. So I'm gonna tell you guys. So we got a crypto group on the website right here. Okay. And we can build anything that you guys want. A lot of people talking about crypto, so we got a crypto group here. I am not the expert on crypto, but definitely join. Check out the crypto game group. You have any crypto value insights? Drop it in there so we can all learn. Anyway, I was invited to a crypto conference from Grayscale this week actually, and my schedule's been so busy. You guys know I've been on the road. I wasn't able to really tap into it. the whole time. I did catch some bits and pieces of it, but some of the information was just redundant. I didn't get any new insights. So I was a little upset about that. They didn't record it. So it wasn't recorded. It was a live session. But I can say from my observation of seeing these firms, these institutions, they are supporting cryptocurrency more than ever. I think that is really, really interesting. And so just taking a look at that, they are facilitating, this whole situation. And if you trade crypto, you understand that, crypto is crazy. And especially Bitcoin has these wild, crazy moves. The price isn't stable enough to be money. But, excuse me. So you have these, institutions that are working on building the infrastructure. But I think that they're actually building the infrastructure for, in fact, it's already known that they're already building the infrastructure for the Federal Reserve to launch a digital dollar, right? CBDCs. So anyway, so crypto is getting a lot of talk, and the S&P Global Dow Jones Industries, they are going to be launching crypto indexes next year. So again, we'll be able to tap right into our trading platforms and get the crypto. So just think about it as just another, product. Okay. And if that's what people are wanting, then that's what they'll start putting money in. I think that we're seeing people putting money into it now. And the reason why is because the markets are overvalued. It's really, really risky. Bonds are, terrible right now. The dollar is, it's basically, losing its value. And I think that, gold and silver will be the smart thing to do. But I think that they would rather go into something else more riskier where they can, make their money. And so I think that we're seeing bigger institutional investors going into the cryptocurrency world, because a lot of them don't like, gold. They don't like the storage behind it and stuff like that. I do believe that we're going to see gold rise after the stimulus pass. So you got to have the stimulus to pass, because that is complete inflationary, and gold is the protection from inflation. So just keep that in mind. But anyway, this right here, you guys got Thinkorswim. You can copy this link right here and launch it into your, you can launch this into your platform. Okay. And you'll be able to get this list right here. Okay. And it's right here on the website, but I'll drop it in the chat for you guys, where you can get this watch list. It's a cryptocurrency watch list. So if you want to get some exposure in crypto without actually buying crypto, these stocks will be the ones that's doing it. We got Marathon Patent Group, that's MARA. You have Kroger. Kroger just has some big cryptocurrency news there. Riot Blockchain. Square. So this is, digital payment companies. They have all cozied up to the cryptocurrency space. So you buy this company, stocks in this company, you're basically going to be able to ride the wave of cryptocurrency, because they're going to be the ones who's going to grow it. Grayscale, GBTC, of course we watched that. PayPal is they have lots of big news around cryptocurrency. Visa and I think Visa and MasterCard are working on the digital currencies for the federal government. Hive Blockchain, MicroStrategy, and this company here, I think I have a news feed on the news feed here about this company. They just bought like a lot of cryptocurrency, a lot of Bitcoin actually. But anyway, this is a way that you can get some indirect exposure to cryptocurrency. So anyway, that's right here on the site. There's an article here from Benzinga that's on here. You can check that out. Michael Burry, you guys remember the movie Big Short? The movie Big Short. If you haven't watched Big Short, make sure you go watch that movie. That movie is legendary. The Big Short. Anyway, Michael Burry, the guy who predicted the housing crisis of 2008, the mortgage crisis. This guy, Dr. Burry. Let me just click on this real quick. He's talking about shorting Tesla, and he offers some words of wisdom to Elon Musk. He said, "Yes, I'm short Tesla, but some free advice for a good guy. Seriously. Issue 25 to 50% of your shares at the current ridiculous price. That's not dilution. You'll be cementing permanence and untold optionality. If there are buyers, sell that Tesla souffle." So anyway, so the Big Short guy who shorted the market, made all that money, had a correct prediction. He's shorting Tesla again. Now, again, these guys, they're just like you and I. So don't think that they're anybody just, so godlike and that you're nobody. Nobody gets it right 100% of the time. In fact, there was somebody who was in a group that said that I don't even know who the guy is. He's not a paid member. He's never went through our training or anything like that. But he said he don't follow me anymore because I got something wrong. But he never disclosed what it was that I did wrong, what I said that was wrong, right? I would love to know what it is that I said that was wrong. He said he don't follow me because I said something that was wrong. And the truth of the matter is, I don't tell anybody to follow me. Nobody follows me. I don't want anybody to follow me. I want you to learn, so therefore you can make the decisions on your own. That's one of the most valuable lessons that I learned by following people, following the gurus, the best of the best. I trained with them and got my head cracked several times following these guys. You can't follow people. That is not a trading strategy. Okay. If you have to follow somebody for your trades, you have not learned how to trade. That is your test. You got to follow somebody you have not learned. See, on Wall Street Jack Boys, we have everybody that's in the chat room every day posting their own trades, right? If you see a good trade that I post, you can choose to follow it, but it's not, oh, follow my trade. Ron posts trades in the group. Dustin posts some good trades in there. Mark posts good trade. Everybody's posting. It's a group thing, right? So I don't even know what people, these guys, you can't be listening to everybody that's on the web. Anyway, so everybody doesn't get it right all the time, right? Not even Dr. Burry, he doesn't get it right all the time. He did, rack up from the housing crisis in 2008, though. Anyway, he's showing Tesla's market cap, which is 646 trillion. Billion. I said trillion. 646 billion, and he's showing all the rest of the car companies at 991. He's basically saying that Tesla is bubblicious. There's no way that you guys are this big. Okay, no way. Anyway, so he's calling them, bluff. He's calling bluff. I don't know what time frame he is shorting them on. I don't know if it's short term. I doubt if it's short term. I think it's probably a more longer term short. So I don't think that he's shorting them just for this month. It could be out into 2021, but I'm not too sure. I would love to know the insight on that. But again, this guy, doctor, data scientist, this guy, he has, teams, and he knows what he's doing, right? So there's some good information there. 780 on the markets. Okay, Tesla. Yeah, Tesla is super bubblicious, man. But I think that what Tesla people are pumping into Tesla, because you got to understand the markets are so distorted right now. The same view, the way that investors should be investing, they are not. Okay, bonds, forget about it, right? You're not getting no interest rates. They don't know enough about gold. They don't like gold, so they'd rather take on risk. And they're just finding places to take on risk. And I think that the investment in Tesla is really more of an investment in Elon Musk and his abilities to shape the future with technology. We're moving more and more dependent on technology. And that's the way we were going anyway. But now it's going much, much faster because of the pandemic. And Elon Musk, he's good. So I think that a lot of it is, people betting on Elon Musk to be able to really change the future. So this week we lost a great economist, Dr. Walter Williams. I don't know if you guys know this guy or not, but you need to know who Dr. Walter Williams is. If you guys remember the debate that they had with T.I. and Candace Owens, T.I. and Candace Owens had a debate. They had a lot of clips that was posting on air, or they were smacking each other up. But what's the guy? Killer Mike, he came in and interjected. He was telling people, you need to be studying Dr. Walter Williams, Dr. Thomas Sowell. He was naming people, especially for the African-American community. You guys need to know who these guys are, because everybody's seeking this means to an end, but nobody understands the means, the systems, the economics. Okay. You don't understand the economics. You want social stuff, but there's no way to that without the economics. You cannot bypass the economics. Okay. So anyway, Dr. Walter Williams, this guy was a freaking genius. Okay. He's very humble, but I call him a genius. He probably won't call himself a genius, but I call him a genius. And I just learned of Dr. Walter Williams not too long ago. He has a website called walterwilliams.com. I encourage you guys to check that out and study. This is what I do all the time. I study. All right. So wisdom of the month. Okay. When you go to his website, you'll see he has all kind of things archived, but he passed away at the great age of 84. Sad to see him go. RIP to the great Dr. Walter Williams. Not only was he one of the greatest black economists to ever live. Okay, you have Thomas Sowell and you got Dr. Walter Williams. These guys are the dudes. Dr. Sowell is still with us. He's over 90 years old. Dr. Walter Williams, him and Sowell were really good friends. Really, really good friends. And so that was crazy that we lost him this past week, and they should have had much more stories on this guy. So anyway, check out his website. What I did here though on the site, I did post a couple of his great quotes on the site in the comments section down here, so you guys can actually check that out. Okay, this is some of the things that he says. He says, "My definition of social justice: I keep what I earn, and you keep what you earn. Do you disagree? How much of what I earn belongs to you and why?" Right? This is Dr. Walter Williams. Okay, this guy's a genius. He said, "Nothing in our Constitution suggests that the government is a grantor of rights. Instead, government is a protector of rights." Okay, he's just telling you the role of government here. He says there is no moral argument that justifies using the coercive powers of government to force one person to bear the expense of taking care of another. He's basically saying there's no moral argument to have the government to rob people, right? To give to someone else. The act of reaching into one's own pocket to help a fellow man in need is praiseworthy and laudable. Reaching into someone else's pocket is despicable. He says government is about coercion. Limiting government is the single most important instrument for guaranteeing liberty. That's freedom. Economic planning is nothing more than the forcible superseding of other people's plans by the powerful elite backed up by the brute force of government. Okay. He's talking about the elite being backed by government. Understand they go hand in hand. It's government people, not rich people, who have the power to coerce and make our lives miserable. He's basically telling people, don't be upset with rich people, be upset with the government. Okay. So what our nation needs is a separation of business and state. That would mean crony capitalism and crony socialism could not survive. So he's just condemning anything crony. Okay. And most of the great problems we face are caused by politicians creating solutions to problems that they created in the first place. Anyway, these are some great words of wisdom from Dr. Walter Williams. If you don't know him, get familiar. RIP to the great Dr. Walter Williams. I just want to share that with you guys. This right here was another research report from Merrill Lynch. These guys here are, I think they're very optimistic. So I like to get different points of views. Oh yeah, definitely check him out, Courtney. Yeah, Dr. Walter Williams is that dude. So anyway, Merrill Lynch, I like to see what the institutions are thinking because we can sometimes see their plays in the markets. So these guys are still optimistic. They're not sounding pessimistic. I want to know what they're optimistic about and where they're optimistic. So this is the studies is right here on the website as well. You guys can go in here, check on, click on the reports, get the study and get the reading. It's much research on here. I know we're like kind of killing time, so I'm trying to get through it quickly. But I think that for the most part, these guys are a little optimistic, and that I think they're only pessimistic about. I can't remember what they're really pessimistic about. I can't even remember here. I did get a chance to read it, but I'm trying to see. They kind of talk about some of the same things that Ray Dalio was talking about. They was talking about immigration and stuff like that, Trump's policies. They're talking about Biden's policies for the most part. What they're doing is basically anticipating the Biden administration and what could possibly be from that. So that's in the way we have to start thinking for 2021. You guys got to understand we're at the end of the stretch. We're at the final stretch of 2021. Everybody, normally you get lower volume in December. Everybody's trying to get the portfolios and everything ready for 2021. So that's what we should be doing as a community as well. Looking forward to 2021. It is still highly risky. Trump is not all the way out the way. He could possibly flip this thing. Nobody knows. For the most part, everybody's moving forward as if Biden has won. But keep in mind, the risk is if Trump could possibly flip it, then that's going to mess up everybody's forecast, whatever they had going on. So just understand you got to, have a little risk there. So anyway, they're just showing you all this stuff. You can check it out. It's on the site. Do your homework. Do your research. The bill forcing Chinese firms to meet U.S. accounting standards passed Congress. Okay, this was the thing about the Chinese company that I was talking about. The article is right here on the website, so make sure you check that out. This is the PMI service numbers. You guys know earlier we were talking about the PMI manufacturing numbers, but these are the service numbers, and we can see the PMI service right here, this first ledger here. We can see that was, slightly down, but remember, as long as it's above 50, then that's growing. Okay, so growing, but it's growing at a slower rate. So this is the service sector. All right. And we are in a service economy. So understand that we serve. But let's take a look at the respondents here. This is what again, these are the head of companies. This is what they're saying. This is accommodation of food service. It says Conflicting national, regional, and local guidelines. So they're talking about the COVID lockdown stuff. Requirements for COVID-19 issues are becoming increasingly difficult to navigate, leading to a lot of just-in-time type of purchases. Okay, so he's talking about the requirements, the restrictions. The next one, businesses pushing to complete projects due to seasonality in most of our markets. Volume is strong at this point, but it will gradually slow as temperatures drop in most of the country. This is talking about construction. You got to understand construction, people building houses. We have a lot of different things that distorted the economy. When you have New York is deflationary, but down south, down here in the South, a lot of people from the New York and California and all those guys are moving to Texas. Even Elon Musk just reported he's moving down to Texas, right? The New Yorkers have moved down south. They have, bigger salaries. These places, California and New York, they pay bigger salaries. It's a big dog company. So these guys are coming down south. A lower cost of living, for a really nice house down in Charlotte, you can get for maybe $300,000. That same type of house in New York will cost you probably $1 million. Okay. Same thing in California. California is probably even worse. I had a client who had a $1 million mobile home in California. I mean, it was just a land she could see over Hollywood. And I was like, man, this is a mobile home. Like, it's $1 million. This is crazy. But you go to Texas, I mean, you can practically buy a damn mansion in Texas for, $350,000, really, really good. I mean, I don't know how long it's going to stay because them prices are going up with everybody moving down there. I used to have a lot of clients in Texas, like, man, everybody's pushing the price of these houses up, but Texans are used to getting those good houses. So you're seeing, the economy shift where you have, people moving out, these exodus, and they're moving to other places. Like my mother, she was like, well, son, you predicted this recession and everything, and I was expecting to be all this stuff. She's like, your prediction was right. We had a recession, but it's like the houses are still, the prices, people still buying houses. I'm seeing people still buying houses. Why is that, right? And this is why the distortions in the economy, we still have to navigate through that. So it's causing distortions, and we have to analyze it in real time. What are we seeing? We're seeing people moving out of those places, and they're moving to these places. They got money, they're buying houses, and so you still have housing prices that are still elevated. You have very low interest rates to entice people to go buy homes, but the prices, we were anticipating the prices to deflate. The deflation hasn't happened yet. And I can show you guys a chart in a few where you normally would see in a recession that the prices of the homes would deflate, people will buy them back up. This time around, we never got a deflation. They're still elevated, and they're actually getting ready to go even higher, which is crazy because you have over 700,000 people a week filing for unemployment. So where are these people getting this money? We have a lot of jobs shutting down. You don't even have job security now. So a lot of people are, again, we're dealing with the irrationalities of human action in the markets in real time. So, and that's what risk comes in at. And that's when you make your forecast, you're never going to get it up right all the time. Nobody ever does. And because we're dealing with human action, okay, which humans could sometimes be irrational. And humans are making decisions with limited information. So you see one side is, oh, interest rates are low. Well, the bank's designed it to be that way because they're trying to get you to spend money to go get that debt. Okay. And so basically the Feds, they basically managed to blow up another bubble. We're in another bubble that has to explode again. So this time, I believe it will be worse, much, much worse than what we saw in March. So anyway, reading this back to this report here, recent spike in the infection rates of COVID-19 have caused us to pause plans to further reopen our campuses. Source of the resumption and expanded use of on-site testing of students and site staff, along with concerns over possible personal protective equipment. PPE shortages occupy most staff meetings. So educational services. Okay. I was just seeing something about there being a lot of teachers, a lot of people that's in the education services. I think over 200,000 of them have lost their jobs on a local level. So education, again, the increases in COVID, shutting that down. Excuse me. What else? Continue to experience difficulty in procuring PPE due to rising COVID-19 numbers, healthcare and social assistance, right? I mean, all these requirements, I go to my dentist's office, right? And they charge you an extra fee. I don't know if you guys have been to your dentist, but if you check the bill, you'll see that they're charging you for the PPE that the government made them get. Okay. So all the little plastic glass shields and all this crap. I mean, you have to come in with your mask on, right? You come in with your, where my mask at? Hold on. Let me show you the Wall Street Jack Boys mask. Make sure you get your little mask, right? You come in with the mask on, all right? and you go there to see your dentist, so you got your mask on to protect yourself, okay? And then you have to take the mask off. I'm like, okay, my dentist got to see my teeth. I got to take my mask off. Did I kill everybody in the room? No, but you got to have all of that. And they got to have these plastic shields and crazy stuff. Anyway, that cost gets passed on to consumers. So, so the PPE, you'll see that type of stuff. This next one here is an information sector. He said, tough economic conditions, lost revenues from the COVID-19 crisis are coming back, but not completely. So they're basically saying that things did rebound, but now they are retracting. Okay. And then this other one says business activity is inconsistent. Businesses that reopen are closing for a second time, leading to interruptions in the supply chain. Again, we talked about that in the manufacturing sector. We're seeing it here in the service sector. Supply chain, shock in the supply chain. That's what they're talking about. So you remember when you guys was having issues with finding tissue to wipe your ass back in March? I mean, today people are living like that shit ain't never happened. Right? You remember trying to go to the store and get some tissue? I was in the store. It was so sad. This old lady I told my wife, I was like, this old lady looked like she hasn't been out the house all week. I don't even think she knew there was a pandemic going on, and she was trying to get tissue, but there was no tissue at all on her racks. And I was like, oh my God, this is so sad. Like, I mean, can you imagine being old, elderly, I should say, and you don't even watch the news, possibly you don't know what's going on. You go to do your normal little route to the store. Most people, you don't go get shit until it's the last minute. So maybe she's on her last roll of tissue. Who knows? And she goes and gets a tissue and there's none, right? Those supply chain shocks that we had. And, these guys, they're talking about those supply chain shocks again. Availability on PPE. This is the third time we hear talking about PPE, protective personal equipment, and other supplies is getting worse again, especially dire with nitrile gloves. Okay. This is in a professional, scientific, and technical services. All right. So this last one says remote working has continued to impact our ability to obtain standard equipment such as iPads, printers, and PCs for our stores and employees who require these items to operate our approximately 800 retail locations. Most items are on a 30 to 60 day back order from our suppliers. Guess what? People still need stuff, but if you can't get it, the demand drives, prices go up. That's all inflationary. Understand that. They're saying they got shit 30 to 60 days on back order. You guys remember in the beginning of the year, was trying to find ammunition and all of that. Like, I mean, it was crazy, right? Remember when we was buying silver and gold? You know how long it took to get the silver and to get the gold? I mean, I was waiting like 2 months at a time to get shipments in. It was crazy. Anyway, these guys are saying they're seeing this, and these are the top dogs, so when you go to get your services and all that stuff, they're having issues. So if they're having issues, you are going to have issues. Again, these numbers, PMI numbers, these are leading indicators. We had the unemployment insurance numbers, 712,000. It was a decrease, but understand it's still sideways. We have these minor nuances here. What I just take a look at here is a chart. It's kind of sideways, basically. So we just look at it from there. Nothing significant because they keep on revising the previous week's numbers up and down. So it don't really matter. It's just kind of sideways. Nothing significant there. High short interest. I know people are looking for high short interest stocks, looking for stocks that basically rebound off of the squeeze play. Posted this as a resource for you guys. The website link is right up in here. When you're doing your homework and research, you can find those right here on the website. Unemployment situation numbers, total non-farm payroll numbers rose by 245,000 in November, and the unemployment rate edged down to 6.7%. So this actually was bad news because the expectation was to be double this number. I think it was expecting like 400,000 something. We only got 245,000. It was positive, but it wasn't positive enough. So we had the employment situation. You guys can click the read more and you can see the full article. I think I posted this twice. Anyway, this here, if you guys know, have y'all seen the new groups that we have? Legends and Gurus group. I can show you guys that one in a second, but this right here, let me just show you. Yeah, y'all seen the Legends and Gurus group? Man, tell me how y'all feel about that Legends and Gurus group, man. I think the Legends and Gurus is going to be sick. Like, I don't know. Y'all tell me, because the information that I got is pretty exclusive anyway, that you get on these guys, what they're holding. You get to see what the gurus, what they're holding, and gather some insight from that. Anyway, this right here is the Buffett Indicator. I got this on the website. We got Warren Buffett in there, of course. You got to have the Oracle of Omaha in there. See how he's holding. And this indicator here basically lets you know when the market is overvalued. And so anyway, there's different variances to this indicator. I just wanted to show you guys this. Basically, we had the peak out right here. We had a peak out right here. We had a peak out right here. And basically the Warren Buffett indicator is showing that these stocks, everything is overvalued. So normally, you just have to tread softly. Doesn't mean it's going to correct now, but we can see that, this is 2008 right here. Okay. This is the Bush recession right here. This is the Obama's one. And we had a small correction here. Okay. But look, it didn't correct enough. So we haven't cleansed out all of the mal activity, all of the mal investments. We haven't cleared out. You need the markets to clear that shit out. You need the markets to clear that shit out. You need the markets to clear that out, right? So we forgot what the 1990 had, that small one, but we never got to clear out here. We're continuing to soar higher and higher. Okay, this is not good. That's why I say when this thing collapses, a real collapse is going to be, probably something like these in the past. Okay, so you kind of get an idea. The bigger, the taller, the harder they fall, right? So my mom used to always say. So anyway, this is the Buffett indicator. This is why he was sitting on his hands, and everybody was pissed off with him. We ain't buy anything. This is another variation of it. Okay, he's using corporate equities to GDP for this one here, and either way you put it, everything is just overweighted. Okay. Overvalued. But you remember I told you guys early, normally, they will behave using wisdom, but they're not. So you're dealing with the irrationalities of the markets, of human behavior. Okay. What is this one here? This is another story about, okay, so this one right here is all the companies that filed bankruptcy. I thought I'd give you guys a little snapshot of this. Short information. Cruise, companies that filed bankruptcy this year, like J. Cruise, Neiman Marcus. Y'all know how we used to get fly up in Neiman Marcus and all of that. Anyway, boom, Neiman Marcus, thing of the past. Stage Stores, J.C. Penney, Tuesday Morning, GNC Holdings, Lucky Brand, Dungarees, Brook Brothers. All of this, these are a list of companies that you guys can check out when you're doing your homework. It's right here on the website. Guitar Center. I used to live up in Guitar Center, man. Like all my kids, we used to go in there and just play the instruments. You guys know I can hit the keys a little bit, just a little bit. I'm rusty. But anyway, so that's in there. What else we have in here? Jumia. I posted this one right here just for Ron. All right. So understand that you can tag, people that's on the website. This is Ron's tag. Make sure you follow him on the website, R2B2. But I tagged Ron on this because we've been following Jumia since they launched last year. So this is just the little insight on Jumia. We talked about it being the Amazon of Africa. So this, if you guys are interested in that particular stock, it's on the website. Then we got the marijuana bill passed by the House of Representatives. It's a cool little article here as well. They're basically talking about, the House of Representatives passed this. It's more than likely going to get blocked by the Senate. So, until that happens, you probably see the marijuana stocks, come up a little bit. So that was good. I did actually play the weed stocks last week and I actually bought some. Crypto indices are on the way. All right. So this is an article here also about the crypto indices I told you guys about earlier. Yeah, it's right, Dustin. Yeah, they running wild. And they got some good cheap ones too. So if you don't have the weed stock watch list, let us know. We get you the watch list. The article is over here in the blog side too somewhere, so you can get it in there. But anyway, so the crypto indices, we talked about that. There's some more crypto information about XRP. Okay. And then, okay, so I pulled this as well. Okay, so I pulled this from my resources. And this right here, this is a good look a macroeconomic view, I got them highlighted, the two biggest dogs of them all. Okay. So when you see the numbers, I think it'll start making sense to you guys. It's United States, GDP 18 trillion, China 11 trillion. Okay. Everybody else is little dogs. Okay. You see all those little numbers? Look at Canada. All right. Let me show you guys Canada. People always talk about Canada, this, that, and the third. 1 trillion, baby. 1 trillion. You see America, 18 trillion, B. It's no comparison. Okay. So understand when Ray Dalio was talking about China and the US beefing, like this shit is for real, because the government for the #1 spot. China's down here. Now, situation. But then you see the export. Look what China's exporting. Look what America's exporting. See, China is serving the world. China's serving the fiends. Okay, they got them J's. You know, they serving the J's out here. They got more J's than we got. All right, so China's serving the world. And then look at the inflation. CPI is supposed to be 1.18. I was talking about this last week with people talking about a pack of chicken wings over $20. All right. The CPI numbers definitely understates inflation, but I can only say that that's my opinion. I can't really necessarily prove it. Basically, I can't really refute their numbers because they changed the CPI, how they basically compute those numbers. It's a basket of numbers. It's not like everything. So anyway, that's a whole debate in itself. Straight up $60 Jordans. You got a couple? Man, I don't know where you got them $60 Jordans at, but I'll buy them off of you. Anyway, China's inflation is lower. Look at the unemployment rates, right? Over 6%. China's under 3%. You got them from China. Hey, listen, China is everybody's, I told you guys, China is where you need to be investing in right now because everybody's going to China, you know. Warren Buffett, he told us never bet against America, right? He was saying that to try to keep money and confidence over in America, but mainstream knows China is where the money's at. All right. Yes, sir. NIO. That's right. And we told people when the stocks was cheap, you know, to get them. This is the money supply right here. If you guys don't know money supply, this is right on Thinkorswim, actually, right on the platform. You guys can check this out yourself. Money stock. So you can see what the Feds is doing when they print all this money, right? And just take a look at 2000. Let's say this is the Obama years, right? We had a recession. So quite obviously the Feds did what they did. They pumped the money in there, right? So you had about that much money. It was the most money ever printed ever. Okay. Look in the past. There was a slower, it was the curve wasn't so steep. Look at it in the past. Look at the Clinton years and Bush Sr. and all of them, right? You see how the angle wasn't that bad. It was, you know, slightly of the printing. And then from the Great Recession under Obama, bingo. So when you start seeing, listen, you can't pull wool over your eyes when you guys do research like this. When you want to know why the economy grew so that people, oh, the presidents did this, that, and the third. Well, look at the money. Always follow the money. They put more money in the system. You see, more money in the system. Now this devalues the dollar. So as they do this, right, as they pump that up, the dollar drops in value. Now check this out. This is Trump years. They continued in the Trump years, pretty much around the same rate, but the only difference is that they raised interest rates under Trump. Okay, so you couldn't get the cheap money. But if they didn't do that, then they probably wouldn't even needed to print this money. So they probably wouldn't need to print this much money. All right, but when the recession hit, look at this. Look at this. This shit is crazy. Bingo. Look at that. I mean, this is almost parabolic. This is how much money that they are printing. So this is when I talk about the whole plays in gold. Okay, logically, this money. Okay, you guys know, you don't know about the quantity, the quantity of money theory, but basically, the more money they put in the system, you get these big bubbles in the stock market. Right, market follows this money supply because the people are not getting this money. This is going to financial assets. They're pumping up assets. They're creating bubbles. They're creating the wealth gaps. They're spending the wealth gaps. Okay. So that's what happens. And so, more when people have more money, they logically do what? You spend more money, right? So this is all designed for that, but this is all inflationary. But anyway, I wanted to show you guys that again, more information for your homework right on the website. That's the M1 numbers. Here go the M2 numbers. Okay, you can see that crazy spike. I kind of zoomed in on it a little more so you can see it better instead of give you all the previous year's data. But you can see how things get just parabolic up there. All right. So most economists and the financial wigs, they're following the M2 numbers. I gave you guys an explanation, a definition of how this stuff works, like what it is. Okay, so you can understand it. I don't want you to be blind. And you notice that a lot of these trading groups out here, a lot of their members are just dumb. I mean, because the traders themselves don't know this stuff, right? They just know how to buy the dip, sell the high. I mean, that's great. We do that too. There's nothing wrong with that. But I mean, don't you feel like if you spend $5,000 to go learn to trade with some guru that you should know this type of stuff? I mean, when you're listening to CNBC, that you should understand what they're talking about. I mean, I never understood this, and I spent a lot of money with the gurus and never learned this. I learned it on my own, and I'm teaching you guys, and you guys can learn with me. I'm still learning. I'm telling you, this is valuable information. So I hope you guys are really enjoying it. So yeah, there we go. Anyway, I don't know if you guys caught the situation with AMC. This is with Warner Brothers. Okay, Warner Brothers. Okay, yeah, this is big. The movie stocks was down. Okay, I'm not even gonna read all of that. Just know that the movie stocks is down because Warner Brothers said they're gonna drop their movies on HBO Max. Okay, so from the movie theaters, on the day that they drop in the movie theaters, they're going to be on HBO Max. I don't know if you guys got HBO Max or not. I have HBO Max. I don't know why we got it. My wife, she was trying to cancel it and she couldn't figure out how to cancel it. And then I was like, well, you might as well keep it because look, Godzilla versus Kong. Who's not going to go watch that? Y'all know y'all about to go watch that. Mortal Kombat coming out. You know you're going to watch that. Dune. We've been waiting on Dune all year. I was pissed off when they canceled it. You know you're going to watch Dune, Suicide Squad. All of that is going to be dropping on the day that it drops in the theaters. You can watch it from the comfort of your home, especially you got a nice Samsung, Sony TV. I got the curved joint, so I'm in the room with the surround sound like I'm in the theater with it. You feel me? So you know you're gonna want to do that. HBO Max streaming. You'll be able to do it from the comfort of your home, which is interesting because that's definitely taking a bite out of these guys. And where I'm at, because we used to go to the movies every week. I got the movie pass, me and my wife and stuff, but the movie theaters here are closed because of COVID. When I was down in Alabama, we was at the Western, and under we're kind of high up, and so we looked down. They had this movie theater that had was a Cinemark that was open, and people were going out. I was surprised. I was like, yo, people going to the movies because they're closed down where we are. So anyway, that's interesting. And it's a smart move for the management. But I think that, Wonder Woman, a new Wonder Woman popping off December 25th. Yep, you catch that from the comfort of your home. I know y'all will be turned up about that. See, Courtney, he already lit. Keith, he lit. Keith always be hitting me up with some good movies. And Mark, you guys always hit me up with some good movies. So definitely gonna be watching that. But anyway, that's good news and know that Warner Brothers is owned by AT&T. Okay, so AT&T. That's who run this. So if you want some exposure in that, AT&T is where you put the money at. This is other news here. Chick-fil-A sues poultry suppliers alleging price fixing. I had to post it because you guys know Chick-fil-A is the truth. Chick-fil-A is the future. All these restaurants need to be taking cues from Chick-fil-A. I mean, when I go to Chick-fil-A, which I eat there like maybe 2-3 times a week, in every state that I go to, it doesn't matter. But they have a very efficient system. Okay. You guys know, you go to Chick-fil-A, they don't even use their parking lot for people to just park and dine in anymore. Have you noticed that? We go to Chick-fil-A, they have the dining room area. Pay attention. The dining room area, you have the guys from drive-thru and the management in the dining room area with boxes of inventory. So they're turning, okay, this is my observation. I don't know what they're going to officially do. But to me, it's smart, it's genius, because they have such a high demand. They can take in more inventory to make sure they stay piled up, but they're stocking, they have all these boxes in their dining rooms. And I go to all kind of Chick-fil-A's and I've seen this consistently throughout them. Boxes of inventory in the dining room areas, management in there, and the drive-thru guys are in there. And they just got the crews that's putting the orders together in the kitchen in the drive-thru window. And so sometimes they're outside taking your orders or what have you, and then you have them on the inside and they're paying attention to the lines. The parking lots, they're not even parking. People can't even park in the parking lots. They got the cones in there. You're just going through and you're going out, right? So if you see a line at Chick-fil-A, don't hesitate to get your ass in that line, because you're not going to be sitting and waiting. You're going to be in the line, but that line is going to be moving. Don't do it at no other restaurant, because no other restaurant is that efficient. Not even Starbucks. I mean, they really need to get their shit together at Starbucks, because those lines be way too long and they take forever to get that together. Take some cues from Chick-fil-A. All right. So Chick-fil-A's, they got it moving. They have a great efficient system. Anyway, they're suing all the top chicken producers, claiming that they have colluded to tax them on the chicken that they're buying. And so when they had to, when they had to pay high prices on their chicken, they got to charge it to their customers. So anyway, this story is right up here on the website, WallStreetJackboys.com. Make sure you guys go there and check that out. That's right. Yeah. See, Chick-fil-A, listen, this is the company that you want to invest in, but they're private, so you can't get none of that. All right. So yeah, that's that. What I do, let me show you guys this group real quick. We got a couple of groups on the website. I wanted to show you guys the Legends and Gurus group. First of all, let me just show you the groups real quick. I know we're a little over. I'm gonna get you guys through it, but thanks for hanging out with me. I appreciate you guys. Definitely. Squad over everything. Check this out. These are the groups. We can have any kind of group y'all want. Like I said, if y'all want just a free talking group, I may do it like a geopolitical group, because that kind of ties into the markets, what have you. You can talk a little bit about politics without Facebook police and all that stuff. You do it right here on the website, along with other people who have different opinions and views, and that's all welcome. So anyway, you got all the different groups that we got here. The Legends and Gurus group. This is dope. Check that out. The IPOs, people want to know the latest things popping before they pop off. You got to get into pop off before it pop off, right? IPO groups, crypto gang. These are all the new joints. So one of my favorite groups is the Think Script Coders. We got Justin, who's been a great contributor. He's not here tonight, but I talked to Justin like a couple of days ago. But we're posting, our codes in here for indicators that cost thousands of dollars, depending. We have so many indicators, but you guys can get that to trick out your platforms and get some great indicators. So all of this is right here on the groups. You can click that from right there, or you can go from your side panel. Website is mobile friendly, so make sure, even if you're at work, man, chime in through the phone and hop in the chat. Okay. All right. So even when you're at work, you get a little break or something, stop by the website, hop in the chat, say hello, once in a while to the crew. All right. So the chat room is free. I told you, people be charging $300 a month for their chat rooms. It's not even worth it. Our chat room is free. So anyway, Legends and Grooves, this give you guys some homework to do. If you're not doing homework, man, I don't know what to tell you. You got to be learning. All right. You need to be learning. The guys at the top, they didn't get to where they are for not learning. So anyway, you can check this out. You can check out the members of the groups. Let me show you. You can check out the members. You can check out the feed itself. You can check out discussions. So the discussions, you'll see them line up in different topics. Okay. So it's a little more organized as we go through discussions. However, you can just drop in feed and just drop some stuff there. And anybody you can send an invitation for them to join the groups. Okay. The group is free. All right. Photos, albums, and all this other stuff. So you guys can see some of the stuff that I have access to, or that I can control, basically. Anyway, check out the discussions on the Legends and Guru side. All right. So check out this, right? All right. So on the Legends and Guru side, check out who we got lined up. Okay. Warren Buffett. Look, check this out. Warren Buffett. Jay-Z. Yeah, Jay-Z up here. You want to see what Jay-Z popping off? Right there. David Einhorn, Ray Dalio, George Soros, Bill Ackman. I call him the Wall Street Golden Boy. Carl Icahn, Jeff Gundlach, the Bond King, Bill Gates. Yes, Microsoft Bill Gates. Even got Peter Schiff in here, the gold bug, right? Michael Burry. We just talked about him, short and Tesla, right? So you can click on, any of these guys, get a profile on them. Who y'all want to see real quick? I'll pull up one of them just to show you real quick. Who y'all want to see real quick? Drop it in the chat. Which guru you want to check out? Let me show you real quick. Somebody drop one in the chat. Who y'all want to see real quick in the chat? Drop a name. Y'all want Warren Buffett? Y'all want Jay-Z? Y'all want Jay-Z? Y'all, let me show you Jay-Z real quick. Is that what y'all want? Jay-Z? Okay, cool. So we'll drop Jay-Z here. He's a rapper for Marcy Projects. All All right. And I just thought that this was like just a little noble idea because I know people like the hip hop stuff. But these guys are not just rapping, and these guys are investing. Understand that Jay-Z is not one of the top dogs. See, just the guys who just rap, they on the scene for like a year, then they go away. You never hear from them again. Jay-Z is eternal, right? This guy, check out his resume. Check out his resume. You want to know everything he's running? Co-founder of Tidal, all right? Founder of Arrive, founder of the 40/40 Club, Las Vegas, executive at Macy Venture Partners. Okay, so Macy Venture Partners. All right, all kind of stuff. So anyway, come down here. Check this out. I had an Impossible Whopper at Burger King last week. Guess who's already invested in this thing, right? Jay-Z, right? Look at that. Kofi Kennigan, Alchemy Insights, Jet Smarter, Away. Okay, he was up in Uber. Okay, he was up at Uber. And I think he's closed out of this one. Buffalo Boss Holdings. All right, so you guys, you get to see what the big dogs are holding, how they're investing. All right, and this is for educational purposes, so you can learn. This is another article posted this week. Jay-Z getting his bid in on weed stock companies, I believe. Yeah, K Health collabs with Mayo Clinic. Yeah, this is one of Jay-Z's companies, right? Bingo. There you go. All right. This guy's always looking for investment opportunities, especially in the consumer sector. These are the things that's in his portfolio. All of this is on the website. Okay. Exclusive information. All right. So not your typical like a Warren Buffett when you see the stocks, because he's more of an angel investor, venture capitalist. All right. So this stuff is like private markets. But I just thought I'd throw them in there. So if it's anybody that you guys want to take a look at their profile, let me know. And, you know, we'll take a look. I'll drop it in there for you. Just let me know which investor you guys want to take a look at. I obviously don't have all of them listed, but you can take a look at the ones that we do have listed. Or if there's any legends, guru investors, you want to see what they're rolling with, what they got popping off. We could take a look at that. So that's pretty much what I want to show you guys. So hopefully you enjoy it. I know I see a lot of people on social media sites talking about, certain guru investors and stuff like that. So I thought it'd be cool. Let me show you guys Bill Ackman real quick. You guys know Bill Ackman, the Wall Street golden boy. He had a big short on the markets earlier this year. He made over $2 billion. It was crazy. Okay. Can you imagine making over $2 billion on a trade? I mean, it's just crazy. Okay. Anyway, this guy here, this is his portfolio. Okay. See how he holding? All right. See how you holding? Lowe's, Chipotle, Restaurant Brands International, Hilton Worldwide, Agilent, Starbucks, Howard Hughes, Federal National Mortgage Association, Restaurant Brands. So you can see what this guy, the golden boy, how he rolling. You can see the weighting of his portfolio. So for you guys is managing your portfolios, you can get some ideas. Okay, doesn't mean you have to copy, but you can see how he holding. You can see how he's betting. Check this out. This dude here right now in real time. Okay. And I posted this back on the 27th of November. Ackman is placing an $8 million bet on a surge in corporate defaults. The same bet he put on early 2020 that made over $2 billion from the crash. And he is doubling up for another big short. So this is what he has on right now. Recently, he's betting for the markets to crash again. He says the same exact trade that he did early this year. He said the exuberance is crazy. People are overly confident. The debts have racked up crazy. He's calling for corporate defaults to come out. So again, when I'm studying and I'm making my, my prediction and my forecast is not just coming just out of ideas, just, some random person. Again, I'm studying the greats. I'm seeing how they're moving, and I'm able to take that information and put it all together. So anyway, check this out. This guy says, he's placing an $8 million bet on it. Ackman is bearish on the vaccine news. He says that it could lead to people taking the virus less seriously. A difficult few months are ahead before the recovery takes off in the investor's view. Okay. Yeah. I mean, so anyway, you guys can check that out. It's right here on the website. And I encourage you guys to contribute to the website too. So I don't catch everything. I'm one man. I've been traveling. I got kids going to college. I got kids that I homeschool. I'm doing a lot, and I'm trying to maintain Wall Street Jack Boys at the same time to give that value to the world that we have over here. And again, that's why it's a team effort. You guys have insights on these gurus or any gurus, post it in here so we can all study it. Okay. Other than that, I think that we kind of extended our session here. I know that we normally would get into the markets here. But what I would encourage you guys to do is to either post setups on the news feed itself, okay, or in the chat room. Okay, the chat room is open 24/7. All you got to do is go right here in the chat room, have a discussion. Whenever anybody's live in here, we can respond to it. So you can actually drop this in here. Okay, here you go. Mark's talking about he had a ratio on TDOC. Okay, got the play in there, 79% profit. Right, this is the chat room. It's free. You can click on a new open in a new window. Okay, the buttons here at the top. All right, you can do video chatting. I know some of you guys don't know about it, but you can individually see me and Justin. We talk. Denard, Terry. You can just talk to individuals. And when you drop the individuals, you'll see a little camera in there, and we can do video chats. Where if you want to video chat with anybody, you could do that there. So that's also available in the chat room. But definitely drop all of that information in the chat, and so that we can get up. And then you can open this in a new tab. Just click on that if you want to see the big screen. And bingo, now you have a big screen of the chat room. All right, so you could do it like that too. Anyway, I just want you guys to be able to, understand we have a lot that's going on Wall Street Jack Boys, but it's all value, and I hope you guys really enjoy it. So make sure you, if you haven't register for free, WallStreetJackBoys.com. Tell a friend to join Wall Street Jack Boys. All right, with that being said, you guys have a good night, and make sure we catch up in the chat room this week. All right, so y'all have a good night. Peace.